From Dubai, Vijay Valecha, Chief Investment Officer at Century Financial. Welcome, Vijay. Thank you for joining us today. Um, Vijay, let's start with the following. I think the this economic cycle that we had seen in global equities markets, gains that have lasted for 3 consecutive years, do you think we're still in an extended cycle of these gains, or have we reached a peak or a state that would prompt the markets to reprice the forecast of next year?
Well, when you look at the entire space of the equities market, it doesn't look like it's overpriced. It does look like we are due for a correction sometime in the first quarter of 2026, but it doesn't look like the pricing is extremely mispriced. So we do expect small corrections to come, that something similar to what we had seen in April of this year, but something major is not really expected as of now. There might be a AI bubble forming, but it's not big enough yet. It's not scary enough yet for us to actually be worried or concerned. So initially, yes, it did look like the air bubble is becoming really big, really fast, but the earnings are there to support it. And if we look at the AI bubble, it's mainly the hardware bubble, and there's a lot of earnings to support it. So the software space is not as overvalued, so it doesn't look like a bubble which will, cause a mayhem in the near future.
Right. When we look at this point, can we say that the US stocks that rely on this limited number of major corporations is a strength, a point of strength for the market in 2026, or do you see risks there? And what is the importance of seeing breadth in the market as well outside this sector? Please slow down a little bit. This is your interpreter. Thank you.
So there is a breadth problem for sure in the market. There are a lot of companies which are not gaining as much traction. There are the few companies, the Magnificent Seven, which is controlling a lot of percentage of the market. We are seeing a K-shaped economy in the US, which is actually a more scary situation. There is literally the AI sector and the non-AI sector. All of the sectors right now seem to have been merged into the non-AI sector as one. And that does look like a problem for the future. It doesn't seem to be that distorted as of now. But yes, the distortion is visible that it is happening, and it is growing much faster. So yes, the problems will come in, not immediately, but in the longer term. At the same time, we do feel the breadth of the market is a bit weaker. So even if we see this year, we have seen the small cap space just around 12% returns for the year, whereas the SPX has done much better, 15% and 20% on the NASDAQ. So the larger breadth is doing much lower. But as of now, the GDP numbers are not alarming. So that is why the breadth is not that concerning. As long as the unemployment remains under check, it doesn't seem to be a bubble which will burst very soon.
Right. Here, perhaps this is linked also to the idea of equities and earnings, and which is the future of the dollar in 2026. How do you see the strength of the dollar and its impact on companies in the US market and, of course, other emerging markets?
Well, it was a dead cat bounce year for all the currencies in the world. The dollar index down around 12%. The euro bounced back after a very long time. So investors who were holding the euro for almost 5-6 years have finally got their money's worth. The sterling as well, similar story. We are seeing other currencies moving up much further upwards towards the dollar in 2026 also. We expect a similar kind of year for the dollar. On the same hand, we have seen the dollar being much more stronger against the emerging market currencies. That is a trend which is most likely going to continue also in the next year. So definitely dollar strength against the emerging markets. A little bit of weakness, not probably the double digits, probably single digits of 4-5%. The dollar index down for 2026.
In this context, despite the fact that the markets are pricing in a rate cut in 2026, on the other hand, there is some who see a contradiction with the long-term yields that are still at high levels. The question here is, what if the Fed disappoints? And this contradiction, is it going to continue in 2026?
It does look like the Fed is disappointing because we were expecting much faster rate cuts this year as well. Next year, the dot plot predicts around 2 rate cuts. There might be a need for a third if the unemployment is a problem. Other than that, I think the 2 rate cuts should be sufficient. The little scary situation is that there is decoupling around the world in the monetary policy. So we might see the eurozone probably, just increasing rates towards the second half of next year. Japan definitely will be increasing interest rates. The Fed, if it does turn over and says to increase interest rates, we will be in a dangerous situation where the borrowing in the world keeps on increasing at a much more higher interest rate. So those debts will become a little scary going forward. However, it's a very less likely scenario. We do expect that there will be 2 rate cuts next year, and the Fed won't disappoint that much.
And on the other hand, do you think that gold is still a main hedging tool in the portfolios?
Well, this has been the year of metals, hasn't it? We have seen gold up around 150 odd, 70 odd percent, silver up 150 odd percent, palladium up 120%, platinum on 170. So yeah, we have seen a large amount of moves on metals, and metals are looking as a safe space given the geopolitical situations, safe space given the interest rate situations, and safe space given the tariff situation. So the tariff game has reduced a bit, and it does look like a much, much lesser threat going forward in 2026. However, the geopolitical situation does still be quite alarming, and that is why we do believe that going forward in 2026, metal space will still be positive. They will not probably have a year as brilliant as this one, but we do expect to see 5,000 on gold probably in the first quarter itself of 2026. $100 on silver won't be very, very far fetched as well.
Vijay Valecha, Chief Investment Officer at Century Financial. Thank you very much for your valuable insights. Thank you for being with us. Have a lovely rest of the day, and Happy New Year.